Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for Singapore FinTech Festival coverage is Sergey Nazarov, co-founder of Chainlink, to discuss continued growth in DeFi and mass adoption. And Sergey, it's great to meet you virtually. Welcome to Trade Talks.
Thank you for having me.
And what is decentralized finance and why is it growing as much as it has been?
So decentralized finance is the next iteration of blockchain technology that actually brings that technology to the forefront of real-world applications. So far, blockchain technology has been used to generate tokens, and that has seeded a lot of value, and it's brought a lot of people to provide their value into the form of a tokenized asset like Bitcoin or other tokens. But that's just kind of the beginning of what blockchains can do. The more advanced use of blockchains is actually something called smart contracts. And smart contracts are a technology that enable any contractual agreement to become highly trustworthy and highly transparent and highly reliable. And not surprisingly, the first category of contracts that are coming into existence are financial products. Those financial products are so superior to the existing traditional systems products such that the traditional system might give you less than 0.1% yield, and decentralized financial products give you anywhere between 2 to 8% yield or an annual rate of return, while giving you less counterparty risk and more transparency. So decentralized finance is really about using blockchains to reinvent financial products in a way that's superior both from the point of view of yield and from the point of view of managing counterparty risk, which are really the two large considerations that I think are going to be on people's minds based on the way that the global economy is going now.
And Sergey, let me ask you this. What role do oracles and Chainlink play in redefining the blockchain industry?
So if decentralized finance is the next evolution of blockchains and smart contracts, the way to view an oracle is the infrastructure that makes that possible. So a smart contract is half of what makes a decentralized financial product, and the other half is called an oracle. And it's through the combination of these two technologies, oracles and smart contracts, that decentralized financial products actually come into existence. And part of the reason that they haven't come into existence at the size or at the security or at the scale that they are at now is because oracles have only recently become secure enough and usable enough to be combined with smart contracts. Foundationally, what an oracle and what Chainlink does is it provides data, and it basically provides proof about the outside world to a smart contract. A smart contract can't know what's going on in the markets. It can only securely react to information it's given. And so while the smart contract is where the contractual agreements are defined to make the financial product, the oracle is what controls and tells the smart contract what to do in relation to market events, which in the case of DeFi and decentralized financial products, all the contracts are really about market events. So that's why oracles and smart contracts being combined is what's really giving us the kind of birth and growth of DeFi.
And I think the question is, to wrap up here, Sergey, is what's going to lead to mainstream adoption of smart contracts?
I think there's basically three important forces. The first force is going to be inflation, and people seeking to counteract the effects of inflation and to essentially preserve their wealth. And that's going to lead them to adopt crypto assets like Bitcoin and other assets, all of which will drive more and more adoption of both that type of asset, and that type of asset is the asset that DeFi. I think inflation is going to lead people to put their wealth into a crypto asset format, both to preserve it from inflation and to get access to DeFi. I think increasing questions around monetary policy are going to lead people to want safety, not from an institution or a logo, but from some kind of guaranteed system that can guarantee them control over an asset or a relationship to a certain economic outcome. And then I think the final thing that's going to take hold is people's ability to control their own assets. I think what is likely to unfortunately happen is that the global financial system will start to come back to fundamentals. And the fundamentals out in the world right now are not reflected by the market, in my opinion. When that happens, when that very large correction happens, people will see that their counterparty risk is much greater than they thought. They will see that their relationship with their assets, while they thought it was secure and reliable, is actually not nearly as secure and reliable as they thought. And the most secure relationship you can have with an asset is essentially controlling a crypto asset that you put into a DeFi protocol, which gives you a higher rate of return, greater transparency over what's going on with your asset, and fundamentally a greater degree of control over that asset, regardless of what other institutions are able to do in terms of their solvency or their counterparty risk. So I think all those three factors are going to lead to a more rapid adoption of not only decentralized financial products, but also the crypto assets that essentially are put into those products. And I think that the adoption of crypto assets will essentially create a very positive and favorable environment for decentralized financial products to generate yield and provide their transparency and low counterparty risk guarantees.
All right, Sergey, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.